This is one of these things. I'm a fairly conservative person. I don't want you or anyone that comes into contact with me blowing up their trading account, because money takes energy and effort and time to earn. So I don't want you saving money and then putting it into the markets and something unexpected taking that away from you. I want you to put it into the markets and be able to grow it no matter what happens. Very, very important to me. Same as I don't want my own trading account to blow up. I want to protect it and allow it to grow over time. So if once in a decade there's a market dislocation and it drops some large amount in a very short space of time, I want to know that I'm protected. And same for you. So that's really important to manage your market catastrophic risk. Even if there's never a market dislocation in your lifetime, you should still, if you don't expect one, you should still trade as though there's a possibility that could happen. The black swan sort of event, the unexpected adverse event, could be a real problem.